Hey, what's going on, everybody? Dana George here, NMLS number 1708296. I am your floral shirt wearing mortgage guy. How's everyone going today? How's everyone doing today? Excuse me. Real quick, just wanted to go over something. A lot of people talk about refinancing is dead. There is a great refinance is a great tool to use. So you just think about what the interest rates are now compared to what they used to be. But think about this. A mortgage is not a loan on the value of the house. A mortgage is a loan on your income and what you can afford. So really think about this. There's a lot of people say, my home is now worth $1 million. I can take out 80%. So that means I can take out like $800,000. Technically, yes, but your income is going to determine how much you could really take out. So we're going to possibly come across some hard times with our recession, this, that, and the third. Over the past 2 years, I've been helping people refinance because they accumulated debt, right? But what happens if the recession happens and, there are more job losses, or people are starting to retire because they don't want to deal with it? Your income is going to decrease, and now you have an equity-rich home and no money to use. So you have this big old asset that you paid for, that you have access to, but you can't get to it because you didn't plan correctly. So what if we do hit some hard times? What if What if your job decreases hours? What if your job just cuts it off altogether? What if they move? What if they downsize? Whatever the case may be. If that happens and you have equity in your home, which over the past 2 years, there's probably like a 40% increase in equity in certain places, when normally it would be 3 to 5% each year, there's been a drastic increase between 10, 15, 20% of equity. But none of that means anything to you if you don't have income. I'm working with someone right now, free and clear home, but the income decreased so much that he doesn't have access to it. So if you think about the interest rates are here, the interest rate are there, why would I take money out? Guys and gals, granted it is a little bit higher, but we are really in the norm compared to what it was 2 years ago, which was exceptionally low rates, which will probably never ever happen again, because now they're going to better plan for something like that. But right now the interest rates are still low, higher than before, but lower now. Take advantage of this time to refinance, because what if we do come through tumultuous times? You might have the equity, but you might not be able to pull it out. People are accumulating debt more now than ever. So keep in mind, a mortgage is not a loan on the value of the home. The mortgage is a loan on the value of you and your income. What can you do with that? What if you took out $30,000? What if your home went up $200, $300 per month, but you had access to $30, $40, $50, $60,000, and you could be able to put that aside in the bank account or invest it or wherever the case may be for hard times, but now you got to it. And what if it did go up $200? Then you take the money from there and you use that extra $200. That's just something I was going over with a client before. When I realized he didn't have access to his money. It's like, there's a lot of people that need to hear this, that your home is a financial tool if you use it correctly. The ROI, return on investment on your home, is actually 0% unless you go ahead and use it and make use of it. Dana George, NMLS 1708296. You can reach me at 516-595-7640. It's 516-595-7640, or mrdanageorge@gmail.com. If you took the time out to listen to this and are a homeowner and have any questions, let's see if it makes sense for you. All right. And if you're not a homeowner and you want to rebuttal this, let's have a conversation on that too. Maybe there's something I miss, or maybe there's something that you missed that we could educate you on. All right. Talk to you guys later. Peace.